This is the lecture about Chapter 22 in your textbook, having to do with events after the reporting period. In US GAAP, we call these subsequent events. So the purpose of this standard is to help people figure out when to recognize transactions that occur after the reporting period, but before the statements become public. So it's going to dictate additional disclosures that should be made regarding these kinds of events. And so here's the definition of what this event is. Those events, both favorable and unfavorable, that occur between the end of the reporting period, like December 31st year end, and when the financial statements are authorized for use. This concept of authorized for use is something we'll talk about in just a minute. It's not something we have in the US. It's something that's unique to IFRS. So we'll talk about what that means in just a minute. The way that we define, that's the same definition we just talked about, so let's go on. We divide these events into two different types. One is an event that provides evidence of conditions that existed at the end of the reporting period. So if our year end is December 31st, these are events that give us additional evidence about things that existed at the end of that year. So that's the first type of event. Those are called adjusting events after the reporting period. Then we have other events that are indicative of conditions that arose after the reporting period, and we call these non-adjusting events. And so we've got these two different types, adjusting versus non-adjusting events, and the names are descriptive because we make adjustments for the adjusting events, but we do not make adjustments for the non-adjusting events. This diagram gives us a timeline of how this would all go. So here we have the year end for the company, say December 31st. That time frame happens, and in between here and when the statements are authorized, we have events that occur. When things occur in this period of time that relate to something that existed at the year end, this transaction then would be, or that transaction will be recognized in the financial statements for this year end. We would actually make adjustments to those statements, even though the event occurred after the end of the year. If there is an event that occurs after when the statements are authorized, they are not recognized in the statements that ended at the end of this year, but they would be recognized in the following year's statements. So the critical point in time is when are the statements authorized? And determining when that happens is a matter of judgment. It depends on things like the structure of management. It depends on statutory requirements, and it depends on an entity's governance and procedures. There may be countries where there is a legal requirement or a requirement based in law that says the board of directors has to authorize the statements, and then that would be when we would determine they were authorized. That does not exist in the United States, but it may exist in some other countries. For example, if the board of directors must formally approve the financial statements before issue, then this is the point that divides the transactions between those that are recognized this year and those that are not. So just to go back to the diagram, this is the critical point. Anything before here is something that will be recognized this year as long as it relates to events that were or conditions that existed at this year end. If it occurs after this, the statements will not be adjusted. We have a bunch of examples here, so let's go through these. If I have a lawsuit that is settled and that lawsuit existed at the end of the year, then that settlement, when it occurs before the authorization of the statements, is going to result in the adjustment of the financial statements, given that we now know what happened to the lawsuit. If the settlement of the lawsuit occurs after the year end, it was not a condition that existed, and so we would not make any adjustment for it. Let's talk about impairments. If we have a customer or an investee that goes into bankruptcy and there was evidence of the financial distress and we had a receivable or an investment that existed at the end of the year, normally these financial distress periods are preceded by, actual bankruptcies are actually preceded by financial distress. And so if the case was that we had this kind of situation with a customer that went bankrupt and we had a receivable with them, then we would go ahead and make that adjustment. If there's a bankruptcy of a customer where there's no receivable that existed, then we would not make any kind of adjustment. Let's say that inventory declines after year end when there's a decline in price due to a condition that existed at year end but had not yet been incorporated into the price. We would make an adjustment in that case. If the decline in inventory occurs after year end where inventory is a commodity, no adjustment. Decline in market value of an investment reflecting events that arose subsequent to the reporting period, no adjustment. If we have an asset that's destroyed by a fire, no adjustment. If we have assets that are purchased and we get additional information about the cost or value of those assets, we would make an adjustment. However, if the assets are purchased after year end, we do not make adjustments even if there's additional evidence. Let's say the company has a profit sharing or bonus structure. Determination of the profit sharing or the bonus amount after year end where a legal or constructive obligation existed at year end. So we would make an adjustment in this case. If the determination of the profit sharing or bonus after the year end where there was not a legal or constructive obligation, then we would not make any adjustment. If fraud is discovered or errors that prove the financial statements are incorrect, we would make an adjustment there. If the discovery of fraud or errors that did not change the numbers, we would make no adjustment. If there are dividends that are declared and they declared before the end of the year, and we're not exactly sure what the value of the assets is because it's going to be a property dividend or an asset or dividend in kind, then once we get additional information, we're going to go ahead and make an adjustment. This would be the case where we have a present obligation where all we're doing is we're clarifying the measurement. If we have a declaration of dividend after the reporting period, present obligation would be recorded in the subsequent period and no adjustment would be made. Let's say the company is concerned about whether or not they'll be able to continue. They make a determination that they intend to liquidate. If the entity is no longer considered to be a going concern, then they may restate the whole set of financial statements using a different basis of accounting, like cash basis or something else like that. If management determines that the entity is running out of cash, but it's still a going concern, then they would not adjust the basis of accounting and we would make no adjustments there. If we have a refinancing of some short-term obligations and that contract is signed after year end, but the agreements are reached prior to year end, then we would go ahead and reclassify that current liability into a long-term liability. If the contract was signed after the year end and the agreement was also finalized after year end, then we would not make that reclassification. We would keep that liability in the current liabilities. Disclosures are required, of course. Disclosures that we need to make are the date when the statements were authorized and who gave the authorization of the statements. Where adjusting events occur, any related disclosures should be updated. If we have events that occur related to conditions that already exist. When non-adjusting events occur and they're significant, we need to disclose the nature of that event and an estimate of its financial effect. And so that tells you what happens under IFRS with respect to these subsequent events or events after the period. The main new concept here is when are the statements authorized, and that is the end of this lecture.